Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call again. We saw the major indices like the S&P and the Nasdaq. They were down about 2.5%, where the Russell 2000 small cap, that was off about 3.5%. Now, what sectors declined the most? We saw technology down as a whole, down about 3.4% after Apple was hit with some proposed 25% tariffs on any iPhones made outside of the United States. Energy dropped about 4% amid some concerns rising over crude oil productions. Now, if we look at the commodities and crypto, we saw gold surge about 5% due to some weaker dollars, some new EU tariff threats, where Bitcoin, now they hit near 112,000. That's an all-time high that ended the week up about 5%. Now, if we look bonds and interest rates, 30-year U.S. Treasury yields rose to about 5.15%. Why is that important? Well, that's the highest we've seen since 2007. Now, we did see a weak 20-year auction over some budget deficit concerns. Now, if we look at some U.S. economic data, we saw business activities improve. The S&P Global Flash PMI rose about 52.1. We saw new home sales jump about 10.9% in April due to some lower prices, maybe some incentives out there. And existing home prices saw their lowest appreciation in nearly 2 years. Now, we are wrapping up earnings, but from a retail standpoint, we had two behemoths out there report. We had Home Depot missed profit expectations, but maintained their guidance. And it wasn't very good for Target at all. They cut their forecast after a sharp drop in same-store sales. Struggling to get it right over there. If we look at international markets, we saw the MSCI index. That's the international equities that rose about 1.3%. So we continue to see some outperformance in the international markets over U.S. China industrial production beat expectation. Retail sales remain pretty weak. Over in Australia, we saw the central bank cut rates 25 basis points to 3.8%. If we look at Japan, the core CPI rose about 3.5%. UK's inflation, now that spiked a bit more than expected, maybe delaying some rate cuts here. We look at Canada, their inflation did fall about to about 1.7%. In the Eurozone, the ECB warned of some fundamental regime changes causing some risk perception of U.S. assets. If we look at this week, now we'll be looking at U.S. markets and some economic news. We see the markets reopen on Tuesday, closed on Monday for Memorial Day. And then we got some key concerns, some potential fallout over last week's tariffs announcements, that 25% on EU, as well as 50% on EU, 25% on Apple's iPhones made outside the United States, see how that all gets resolved. We'll look at the major economic releases, the FOMC meeting minutes. We'll be looking at the second estimate of Q1 GDP numbers coming out on Thursday, some core PCE price index for April coming out, and then some other data like durable goods orders, trade balance pendings, some home sales, revised consumer sentiments, and some inflation expectations. Now, kind of setting the tone this week and really kind of carrying up the rear here is NVIDIA. Huge tech behemoth reporting on Wednesday, maybe setting the tone after the market, setting the tone for that market on the next day. But internationally, we'll be looking at some inflation updates with Australia, Japan, Germany, and then China will be putting out some manufacturing service PMI. That'll be coming out Friday evening. Jeremy?
Gotcha. Well, Graham, thank you. I had a question. So I know that most of the earnings, kind of the earnings season is done now, other than NVIDIA today. Did you see the market going into the summer, making any drastic changes, or what's going on with the market going into summer, do you think?
Yeah, I hate to ask this, but I don't know. The market's due to a lot of headline risk. I mean, you have an aggressive administration that changes a tone and tenure at any one time, so the market's still kind of trading off of that, even though it seems like it is looking through some of this, and that's why we bounced back so violently from that violent drop that we had. So I think you just got to expect increased volatility based on headline risk. But right now, the numbers look pretty decent. From earnings, came out probably a bit better than everyone thought, or held up pretty good. Consumers holding up pretty good, not getting overextended too much. The economy's holding up. Inflation still is it's still declining in certain areas, still in check. It's still a question mark of some of the tariffs that were still coming through is going to affect that inflation rate. We just have to see maybe another quarter to two. So again, just expect some volatility, but on the surface, from an economic standpoint, things look pretty decent.
Gotcha. Well, Graham, we always appreciate
got
the
it.
information and expertise. And thank you to our listeners that check in with us every single week. We look forward to seeing you next week.
Take care.